Trader Tina here, ShortMeTina.com with my daily recap, continuing March Blitz, where I recap a video every single day, Monday through Friday, when the market sits open for the next, for all of March. So I'm uploading this video a little late because I've spent the past about 3 hours trying to assemble a really simple bullcrap computer desk that my daughter bought. I don't know why I volunteered to do it. I was completely annoyed. I literally got to the finish line and I just couldn't. And I apologize for sharing this with you, but like I literally said, F it. I got to do my video, take it as is. But for some reason, the last step of the instructions just did not go well with for me. I was just unable to actually slide that draw in, and I don't know why. It's on my mind. It's going to nag me probably until I correct it. But I think I know what I did wrong, and after this video, I'll probably get back to it, or I'll take care of it tomorrow. But super annoyed. Horrible instructions. Anyway, so that's the reason why the video is being uploaded late. Anyway, so let's just jump right in. Thanks for listening. So right now what you're looking at is the S&P 500, the SPY. It's a daily chart. The market's clearly rallied. We're up north of 1.5% on the day, close at 387.17. For anyone that's been following me, you know that I'm short the markets, not because that I think that I'm right, but following sort of technical analysis, following my method, I went short when this trend line that started back in March of 2020 right here. When this trend line broke around here, I took a short. The markets has since rallied again. We're up north of 1.5% on the day. Now, clearly we had volume pouring in the past few days, and this trend line is still intact. So technically speaking, we are still in an uptrend for the SPY. Now, can the trend possibly break? Absolutely. Hence why I'm still holding my short position, but I have no intentions on marrying this position. And if the market continues to rally, I'll just get out of my short with a loss. But I'm still relatively cautious in the markets. So what I'm gonna do today, again, because I'm uploading the video so late, I'm just gonna do an analysis of the market. So it'll be the QQQ, the Dow, and the Russell small cap. So anyway, so that's my take on the SPY. Still short, although the markets rallied today. If we continue to build on this momentum, then I'm gonna let go of my position, but I'm still cautious out there. What else? All right, so we have the QQQ also rallied a lot better than the SPY, whereas the SPY did about a little over 1%. The Qs north of 4% to close at 311.77. This is the daily chart. What gives me a better view? Let's switch to the, let's stick to the daily. So you can see here with the Qs, in my opinion, right? This is just my opinion. I feel like we're going to, after this uptrend here that I wouldn't say ended. So after this uptrend that I feel like the market is about to digest, that stopped or paused around here in July of 2020. I think what's going to happen, let's go back to the candlestick view. I think what's going to happen in the Qs, I think we're going to experience consolidation here. So I definitely believe that it's going to cycle through the mid 260s, which is the bottom of this range here, and the top that we just recently put in, which is somewhere around here. Let's call that also the mid 300s. So I think right now what the QQQ is setting up to do, it's really to just sort of like digest this uptrend move here. And I can see us cycling through these 2 points for quite some time. So again, between the mid 200s, around 260-ish to around 340, 350, I think we're gonna cycle through there for quite some time. And that's my take on the Qs. The SPY broke that uptrend as I indicated before, but then we rebounded. The Qs, I think we're going to consolidate. What do I think about the Dow? All right, so for the Dow, it's up marginally on the day so the markets clearly are all over the place. You got the SPY putting up about 1.4%. You got the Qs putting up north of 4, and then the Dow struggling, barely up 0.11% on the day, close at 318.61. So if, in my opinion, the SPY broke that upward trend line rebound, the Qs are going to consolidate between the mid 200s and the mid 300s. With the Dow, it looks like the Dow, in my opinion, actually broke out of its period of consolidation. And consolidation, obviously, with your hiccups here, and hiccup there, you can see here that we sort of cycled through a point dating back to late 2017. We made attempts to break out of that range in January of 20. That did not happen. This, again, is the pandemic. We collapsed. I think late last year, the Qs have broken out of that 2 to 3 year base, and it looks like it's trending up. So that's my take on the Dow. It is in an uptrend after a period of consolidation. And what do we have left? We'll talk about the Russell. All right, and so let's wrap it up with the Russell IWM. It's a daily chart. Again, we're looking at a line view, up a little over 2% on the day. We close at 223.34, within points of all-time highs, I believe, right? Let's look back. Yeah, just excuse all that. Within points of all-time highs. So consolidated here, right, dating back to around 2016. Again, you had your hiccups here, you had your hiccups here. But look, you can see after late 2020, you can see small caps is on a tear. Does that speak to investors or traders' risk tolerance? Perhaps. But it looks like a clear breakout uptrend. People are definitely pouring into small cap. So that's kind of what I'm seeing in the SPY, the Qs, the Dow, and the IWM. Make of that what you will. And again, I'm going to cut it there. Apologies for the late videos, or for the late video rather. I was fussing trying to assemble a computer desk, and I feel like I'm going to go back to that now. Anyway, ShortMeTina here from ShortMeTina.com. If you understood and liked any part of that video, do me a solid thumbs up, comment in the comment section, share, forward, just get the word out. Right now, what we're doing is we're still hosting that free 14-day trading course where I basically talk to new traders about the things that I've learned trading the stock market. I've been doing it for about 20 years. I had my ups and downs in betweens. I was going to quit. I decided not to. Sometimes I wonder, why am I still in this game? But I love it. So I managed to go from really kind of like losing consistently year over year to actually being net positive consistently year over year. And in this free trading course, I basically talk about some of the things that have worked for me that I still implement and employ to this day. So if you're interested in that 14-day trading course, especially if you don't have much else to do, then you can definitely head on over to our website. No credit card needed, none at all. Just a valid email address so I can know where to send the videos to. So if that's something that you're interested in, definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening, and always thank you for the support. March Blitz continues tomorrow. Talk to you soon. Bye.